bringing Scott Bauer joining us this morning to take a look at the numbers. Market Reaction 2 from Scott's here from Prosper Trading Academy. Scott, good to have you with us here. And yeah, we're getting a nice lift here. Stocks, S&P is back to 5260. Looking at the NASDAQ, getting a nice lift here back up to 18,620 as the numbers come in line with expectations, even slightly lower.
I think that the market has a big sigh of relief right now. Some of the expectations, I think, leading up to this, Ben, were that we were going to get a number pretty much in line and not a hot number. And I say that because volatility going into the print here was very muted. Going into the print, S&Ps were looking at about, just about a 0.5% move, which is a lot less than what we've seen recently with big eco data prints like this. The VIX, as we saw yesterday after an initial, pop-up, came off towards the end of the day. So I think the market was expecting something in line, and there's a big sigh of relief here. Now, does that mean that it's the all clear for bulls moving forward? No, but I think what it does do is gives the market, gives the sentiment, especially to the Fed, that, all right, you know what? We are back on track making progress. It might be slow, but we are back on track here. So, all of that rhetoric that Kashkari especially had put out there and put a little fear into the markets that not only may we not cut, but there still could be a potential hike here. Those fears are probably alleviated somewhat right now.
Scott, that kind of feeds into what I feel like we've been talking about for a couple weeks right now. Kashkari, Williams, we mentioned this morning, Logan, some of the Fed speakers really have added to the speculation, but the trend's pretty well defined here still. I mean, we just posted new all-time highs within the last couple weeks here in the major indices. I mean, it's pretty easily identifiable how investors are interpreting all of it, understanding that we may not necessarily have achieved our goal yet, and that last mile is the hardest part, but also expressing confidence in the Fed's ability to get us there.
Yes, and this is really what they wanted to see. And it's that number, I really dislike the Goldilocks term. It gets used so much. But this is one of those numbers that does give them a little confidence of fighting inflation, but not too soft where they can look at it, or the market can look at it and say, oh, no, the economy is really slowing down right now. Consumers are really, really pulling back, where there's going to be a wall of worry on the other side. So, this is a good one here. It is just one number. It is a big one. Yeah. It is just one number. Yeah. And you know what? Before we look at it next week, this time we're going to be talking about
jobs,
the jobs. Right. Exactly.
And the ECB, which I want to get your thoughts on as well, because we had some numbers out of Europe, some CPI data. But in terms of this being what the market wanted to see, I would have to agree. And in some ways, earnings have been what the markets wanted to see as well. Sure. Maybe not great, right? But not bad at all.
Not bad at all, especially with the price levels that we're at right now, PE ratios where we're at. So I think all in all, if somebody had to wrap up let's call it the earnings season, the last 6 to 8 weeks of the market here, I think you have to say it was a pretty good success for overall market stability. There's been obviously some volatility here going into the month with the old mantra of sell and May go away. That really didn't work. I mean, obviously, the last week or so, the Dow has taken a little bit of a beating off of those all-time highs. But overall here, I think, the market has really stabilized and has done a really good job in the face of what could have been, some big headwinds coming at it.
Yeah, definitely. I would agree in many ways. Overall, a reflection of a very strong economy also in terms of earnings, right? And have definitely carried the weight for the market for a couple weeks now. I feel like maybe in a couple months, one could argue. But in terms of, a minute ago, we were talking about the lower extremes and the NASDAQ testing one down around that 18,500 level. We talked about spending a limited amount of time there because we're in an uptrend, right, on these extremes.
Exactly.
Especially the lower extreme. Doesn't give you a lot of time to get in, or if you're one of those kind of traders that just wants to place a limit order and wait for the market to pull back, it hasn't provided you that opportunity in many instances, right? We've seen that trajectory upside, which is, again, a reflection of what we're seeing here in terms of the economy and the data as well. But, hey, Scott, talk to us because did you get a chance to look at some of the numbers out of Europe overnight, Japan? We had some CPI figures. And I just feel like with the focus on inflation headed into the ECB announcement next week, I mean, this is where our attention should be.
Absolutely, and especially out of China too. China's numbers were pretty weak again, But if we look at the ECB, Ben, you and I have talked about it. I've said it. I think they are going to cut. They're going to cut cautiously,
Hmm.
saying, we don't expect this to be a continuation. I do think they're going to cut. They see things slowing down over there. So that, is that going to be the beginning? Is that going to open up the dam for other central banks, other currencies to follow? Probably not just yet, but I think they're in a little different situation than we are here, certainly.
I like the reminder of China, right, Ed? That kind of slipped off my radar. China's May PMI, a major miss. The manufacturing
Yep.
fell back below 50 to 49.5. It came into a 3-month low, basically. So that ties directly against what we had been talking about for all this week. For the most part, China recovery ultimately feeding
Yep.
some of these commodities we had seen. Scott, ultimately, where does this put the Fed here right now? I mean, is it just kind of one more kind of little notch in the belt? You mentioned that we're going to be already looking forward to the jobs report next week. I feel like in some ways, everybody talks about this being the Fed's closely watched inflation gauge. I feel like labor conditions right now is where the focus is.
There's no question that's where their focus is. This is a big number, but as Powell has said for what seems like years now, it is labor. So
Okay.
next week will be big. I think the focus right now, though, is back on September. I haven't seen what the CME is looking at yet for probabilities, but I have to imagine that probably upticked a little bit to the probability of a cut in September.
Scott, appreciate you joining us here, taking a look at the numbers here today and helping us get a bit ahead of the data again a week from today, where we'll be having a very similar conversation, right? Trying to get ahead of the Fed, the scope and the magnitude of cuts ultimately, the pace of and the timing. Scott Bauer joining us this morning from Prosper Trading Academy.